Let's break the scenario down and deal with it bit by bit. So initially, we're given a level of staff costs and office costs. Now for a retail business, the cost of sales is simply the cost of the goods being sold, and everything else are indirect costs, they're overheads. So these two things are going to be the level of overheads per day. So let's work them out. 240 staff, each at an average annual cost of 30,000. That gives us 7.2 million. And to that, we need to add the office costs, which are 3.75 million. That gives us an annual total, which we need to convert to a daily amount for the model. So we divide by 365, and we get 30,000 of overheads. So I'm going to close the calculator and enable full screen. We set the overheads to £30,000. And that's the first bit done. So then we're told that the revenue target is 100,000 per day. So let's set that to 100,000 per day. And we're told that the target cost of sales is 65,000 per day, which then means that the gross profit each day is 35,000. So 35,000 as a percent of 100,000 is 35%. So let's adjust the gross profit margin to 35%. We're then told that receivables days and payables days should each be 7 days. So let's adjust these. And now that we've done all that, the final decision to make is the level of purchases. So our goals are to slowly build up inventory to a level of about 500,000. We want to generate profit and pay dividends without relying on an overdraft. So we need to think about what the level of purchases should be in order to let us do that. So let's start off with a level of 50,000. So when we first start off, we can see we're buying 50,000 each day, and obviously we can only sell what we buy. So our cost of sales is 50,000, and our revenue is not the 100,000 target yet, it's only 77,000. So the limiting factor here are the purchases. If we increase purchases, we start to see that revenue increases as well, because our profit margin is fixed at 35%. So let's increase purchases some more. Let's drag it up to 68, and now we can see that revenue is 100,000 per day, cost of sales 65. So now our inventory balance is slowly increasing because we're buying £68,000 of new inventory each day, and we're selling 65,000. So it's going up by 3,000 per day. Now in this example, we've incurred a bank overdraft because to start with we had purchases too small. But if you set purchase to 68 from the start, then we won't have that bank overdraft and the bank balance will remain blue. So as this goes on, we'll build up to 500,000. You can speed it up at the bottom all the way up to 7 if you wish. And what that does is have 7-day cycles instead of 1-day cycles. And what we'll do now, slow it back down, and we'll pay a small dividend out to shareholders. So we will just pay a 100k dividend.